Welcome to the Hamsley Analytics Daily Market Commentary. I'm Paulo Navarro. Today is Friday, October 19, 2012. For the market internals, the New York Stock Exchange advanced decline differential closed at negative 1,655. The Nasdaq advanced decline differential closed at 1,506. We had 17 new 52-week highs for the S&P 500 and 5 new 52-week lows for the S&P 500. For the volatility, 487,000 contracts traded on the VIX today with 112 million in total premiums paid. For the dollar-weighted put-call ratio in November, a 0.97 reading with 32% of the total premiums paid. And in January, at 11.39, which is very, very bullish, 51% of the total premiums paid. And we have very big volume here on the total premiums paid today from the VIX. Here we have the weekly chart for SPX. Today, Friday, we had a very interesting day. We were down 24 handles or 1.66%. Big reversal from what we had done previously in the week. And you could see here we have an inverted hammer on this weekly chart. This is a bearish pattern here. The only positive thing that you could take out of here is that we ended up positive for the week. But that's it. We are seeing somewhat of a pullback from the highs, which is obvious here. We had this big runoff and maybe looking for a bull flag on the very long term. This is the weekly chart, remember. So maybe we could even pull back to 1400 and after that resume our run higher. That's going to be in the longer term for 3-4 weeks out. So 1400 is going to be the line in the sand here for this chart to be bullish. To continue here, we have CI indicator and we're started to go lower. Last week we dipped here and CI dipped to negative territory, and this week we confirmed it. So we may be looking for short-term correction toward that 1400 level here on the weekly chart. To continue with the weekly chart, here we have the moving averages on the weekly chart, and one interesting thing here pops out. We closed below the 10-week moving average for the first time since June. You could see here the first time we closed above this 10-day moving average, the red line. We had held it from a weekly close since today. Yesterday we closed, last week we closed below it, and today we confirmed a weekly close below it. So now we have 2 weeks in a row closing below this 10-week moving average. Kind of bearish. Our next target here is 1400. That's gonna be the 20-week moving average, and it's gonna be an important psychological level of 1400, which is always important. So this is the level we're watching on the next couple of weeks. If we go to the daily chart here for SPX, here we have the moving averages and a trend line I just dropped. You can see here we're starting to make a couple of bearish things here. We made the high of the year here, failed to make a new high, and this leg up we were going to make, and we failed to go higher. This means we are getting lower highs in the daily chart, which is somewhat concerning. On the downside, we have held this level here, which was since June, and today we're barely breaking it. So we're gonna watch that on the daily chart, this upward trend line. We need to hold this level, maybe bounce back up Monday if we want to try to resume our way higher here. If we don't, our next target would be the 1400 we just talked about. Very important level. We are also here at the previous high of the year made in March and April. We had this line there drawn. So we are right now here facing a critical pattern. We must hold this level, and if not, we are coming to this 1400. Big reversal here today. Not good after we're going up 3 times in a row with very positive momentum, and we just ended. Important to note here, we have also the 50-day moving average at the same levels with this upward trend line, which is important because we have some type of confluence here on the daily chart. Now going to our Sigma channels on the daily chart, we could see here that we broke 0 Sigma to the downside. Yesterday we talked about this outside day We did not reverse and close below, but we have a big range yesterday. Today we closed below zero sigma without any hesitation, just broke through it and kept on going. So our target here on the downside would be on the daily chart, pretty short term, 1414, and if we go there, we're probably heading to 1400, very important level on the weekly chart we just talked about. So for the targets here on SPY, we're looking for 140, 140, and longer term, we're looking for 140. That's going to be the targets we have here on the downside for SPY. If we go to NASDAQ, here we have the Qs, NASDAQ ETF, and let's start with the weekly chart. Here we have the weekly chart, very interesting, a more bullish chart here. We broke zero sigma to the downside on the weekly chart, which is bearish, and now we're looking for 63.90 and 61.44. Very interesting action. This is of course due to Apple, Google, both of them facing big losses here today, and Google of course having a bad day yesterday. Microsoft was bad also. The big names here are having a bad earnings season so far. We'll have to see what happens next week with Apple. As for the daily chart for the NASDAQ ETF, the Qs, here we have it. We talked about maybe if we broke down, we were going to this 200-day moving average. Yesterday we said we failed at the 0.6 20-day moving average. Bearish here to this 65 level, 64.94, which is the 200-day moving average. We are pretty close, and that is going to be our target here. A test of that 200-day moving average. Very important to watch this level like a hawk here, 64.94, the 200-day moving average. Now let's go to the IWM. And here let's start with the weekly chart on the IWM. This is the Russell 2000 ETF. This is the risk off ETF. We have to see here what's going on. Important levels here on the weekly chart. We have an inverse hammer on the chart. Very bullish candle here. And we are also at 0 sigma. Interesting. We must hold this 0 sigma of 80.98. Let's call it 81. If we hold this level, we're looking maybe for a leg up, 85 level, 86. That's going to be in the following weeks. And on the longer term, 4 or 5 weeks out, maybe even test this 52-week high for the IWM. Based on the pattern here, not much of a bullish chart. And here we could see also that CI is turning lower and pointing to lower prices. Based on that, we could get some targets here for the shorter term on the daily chart. The 200-day moving average from here, it's almost a given, 80.33. That's going to be the level to look at. Maybe try to get a little more bullish on that level if we are able to hold. For the moving averages, let's go to this chart and let's look the moving averages here. We broke this descending triangle we had here, clearly close below it, and now we're looking for an 80, 33 level, 100, 200, and 150-day moving average. All of them at the same levels. Very important. You could count on that level, 80.33. That's going to be the target here on the downside. On the upside, we're going to have to keep on trying to break this trend line here, that it's going to continue. If we're not going to break it, no higher prices, lower highs, lower lows in this chart. Pretty bearish chart so far. Here we have the weekly chart for GLD. We were kind of overbought here on the short term. We talked about it after the Fed and the ECB came out with unlimited printing of money to take care of the problems here. Gold is now taking a pullback. On the weekly chart, it looks like we have some more room for more pullback. Maybe watch this 61.44 level. This is on the weekly chart, longer term view. Also, we watch here, CI is now trying to turn red here, lower, positive, low to negative. You could see here on CI trying to go lower. On the more shorter term, let's look at the moving averages chart. Here we have the daily chart for GLD, and we talked about maybe breaking this and going to the 50-day moving average. Well, we got it here. We have the 50-day moving average. We bounced from it today and did not finish at the lows, which was kind of positive if you look at it like that. We are at some type of support here. We want to hold this 166.58 level. The 50-day moving average is going to be critical here to hold for higher prices. If we do not hold, this is our next target, 161.29. That's the number we just talked about on the weekly chart. Some important confluence here, the 0 sigma on the weekly chart with the 200-day moving average on the daily chart. So watch here, maybe try to get some bullish here momentum, but if we break that 50-day moving average, bail out quickly here on GLD. Maybe look for a bounce to the 170, 171 level on GLD for that 200-day moving average. This chart is a very important chart. We have the weekly VIX chart, and we have a very important event coming up here. We were talking about last couple of Fridays, none of the weekly close were able to close above 0 sigma. Well, today was the first since that happened to the downside. We closed above 0 sigma at 17.06, and this is pretty bearish for equities and bullish for volatility. So we're going to have to watch for higher prices, maybe come and test this 22 level. That's going to be pretty important here. Let's watch the VIX next week, pretty careful to see how it's forming, if we're going to confirm that breakout here of 0 sigma on the weekly chart. As for the daily chart, let's go here to our daily chart on the VIX. We talked about coming and testing this 200-day moving average again. We failed to get here, and we failed here. It's going to be pretty important to see if we are going to be able to break this 200-day moving average on the VIX to the upside. If we do, I'm calling even for 24, 25 level. Maybe try to get some protection before this spike in volatility comes, as we are getting important readings here on VIX right now. Still a low reading, 17, but you know the VIX and the volatility could spike pretty fast. Today we were up 13.5% for the day. So it's better to be proactive here on the VIX and of your protection. We have a special offer by TradeStation. Get your HEMSI Analytics proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below. Have a great weekend, and I'll talk to you Monday.